Hi guys, welcome to another video. So in this video we are going to discuss about the valuation methodology for the investment banking interviews. Let's say valuation is a very crucial part for the investment banking job, and apart from that the interview as well. So we can discuss about like what are the methodologies are there in the valuation parameters. So what are the three major valuation methodology? So first one is a comparable company analysis. Another one is the precedent transactions, and another one is a discounted cash flow. So how we can rank these methodology from the highest to lowest? So this is a trick question like that. There's a no any kind of specific thing that can be ranked these things like precedent transactions will be higher than the comparable one, like due to the control premium built in the acquisitions we can say that. But DCF could either go away. It's better to say that it's more variable than the other methodology, and it produce the highest value, but it can produce the lowest value as well, depending on the assumptions of a different thing. So next, when would you not use the DCF in valuation? Like, what is the day like when you can't use the DCF in the valuation? So you do not use the DCF if the company is unstable and the unpredictable cash flow, and when the debt and working capital serves a fundamental different role. Let's say debt and working capital have a different role for the different numbers. So in that case, you can use a DCF for them. For example, banks and financial institutions like do not reinvest the debts and working capitals is a huge part of the balance sheet, and so you won't use the DCF for such companies because that's unstable for them. So this is something like that, like DCF can't be used in the different parameters for them. So what are the other valuation methodologies are there? So other methodologies include the liquidation valuation, valuing a company's assets, assuming that they are sold off, or then subtracting the liabilities to determine how much capital is there. If any equity investors are received, so that will be a different thing for them. Replacement value, like valuing a company based on the cost of replacing its asset. So we are replacing the asset with some other asset, so that's why this is something like that. LBO analysis determine how much a PE firm could pay for the company to hit a target IRR, usually in the 20-25% range. So that is something like that. It's a LBO analysis. Sum of parts method. It's valuing each divisions like company separately and adding them together. Let's say you have two division. One is plastic division, another one is electric division. So you will you know value the each one on the different scenario. There's a no common valuation methodology for each of them. So that's a one thing. M&A premium analysis. So it's analyzing the M&A deals and figuring out the premium that the each buyer paid using this to establish like what a company's worth is. So this is something like that. It's analyze the M&A deals and figuring out the premium. So this is something like that. Future share price analysis. So it's a projecting a company share price based on the PE multiples of the public company, and that is all based on the comparables as well. So, and then discounted it back to the present value. So this is something like that. Future share price analysis, projecting the company share prices based on the PE multiples of the company or comparables. So we can say this one. Then you can say that when you would use a liquidation value, it's the most common in the bankruptcy scenario as well. Like this is used to see whether the equity shareholders will receive any capital after the company's debt have been paid off. So this is something like that is a liquidation value. So this is the most common bankruptcy scenario, and it is often to advise the struggling businesses whether it's better to sell off the assets and separately or try to sell the entire company. So that is something like that when you use the sum of parts method. So it's the most often like when a company has completely different or unrelated division or a conglomerate like the General Electric. So this is the one thing. And if you have the plastic division, let's say entertainment division, energy division, consumer finance division, technology, you should not use the same set of comparative multiples for them. So that's a precedent transaction. So the entire company as well. So this is one. When do you use a LBO analysis as a part of your evaluation? Obviously, you use this whenever you are looking at the leverage buyout, but it is also used to establish how much a private equity firm would pay, and which is usually lower than the what the company will pay. So this is something like that, and it is often used to set as a floor on the possible valuation for the company you are looking at. So this is something like that LBO as a part of valuation. So this is another scenario for them. So what are the most common multiples for them? It's a EV by unique visitors, EV by page view, or something like that. These are the very common use multiples like we generally did for the valuation methodology, and that's good for the another methods as well. So this is the some short video about the these investment banking questions. Let's meet in the next video, and keep subscribe the channel and follow the videos for the more content. Let's meet in the next video.